Okay, let's learn. Let's learn. So today I'll be going straight, no play, no jokes, straight up, straight to business, right? Right? Yes. So we'll be learning how to analyze the chart and place a trade. Do you get how to what? Analyze the chart and place a trade. How to analyze the chart and place your trade. Straight to business, no play. So the first thing you do when you see or when you want to analyze the chart, the first thing you need to do when you just okay, let me get my laptop like that, place a trade or to analyze the chart. The first thing you need to do is you go to the higher time frame. You get you go where you go where the first. Let me list out the 5 methods we learned during the course of this training. Number one is what? Is what? Number one. Hey! Number one is what? Number one is what? Ah, God! What is the first method we learned? Eh? What is the first method we learned? Ah, God. Support and resistance. Hey. Number two is what? Is what? Time. Eh? Time frame. No, the second method we learned. Trend line. Number three is what? Good. Fibonacci retracement 2. Number 4 is what? God bless you. Imbalance. And number 5 is what? Order block. The imbalance is also called what? F what? God bless you. Order block or what? OB. So when you want to analyze your chart, it's either you use this method, or this method, or this method, or this method, or this what method. So it's either know which one you want to use. So I will patiently and calmly show you guys how to use each method. Do you get how to use what? Each method from support to resistance. So from support and resistance to trend line to Fibonacci, imbalance, and order block. So it's serious business. Do you get? Do you get? Okay. Look me up. So how to what? Analyze the chart, right? How to analyze your market charts and place a trade, right? And place a trade. That's to this thing. So look up. So look me up. So the first thing you do, you know that all this method, we apply them firstly at the what? Higher time frame, right? Because the higher time frame gives us the what? The direction, right? So let me show you how to apply this one. So look me up. You see, the first thing you need to do, go to higher time frame, either weekly, either what? Higher time frame. First thing, either what? Weekly or daily or what H4. You get? You get? So when you go to the higher time frame, you look at the chart. Is it trending? Is it an uptrend or what? Downtrend? Do you get? Do you get me? So let's start with uptrend. Hmm? So look, I want to apply. Look me. I want to apply support and what? Resistance in uptrend. In uptrend. In uptrend, we use what? We use what? Support, right? Right? Then in downtrend, we use what? We use what? Resistance. So look me. Look me. So I want to apply support and what? Resistance method. So since it's uptrend, I will use what? I will use what? Support, right? Look at me. So once I check my chart like this now in the higher time frame, either weekly or daily or H4, I will get my support zone. Abi? So look, I told you that the support zone is at the what? Previous high, right? It's always at the what? Higher high. Abi? Higher high, higher high, higher high, right? Higher low, right? Higher high, right? Higher low, right? Good. So I want to apply support and what? Resistance method. So since it's uptrend, I'm using what? Support, right? So it means I have to get my support zone. Abi? And it's gotten from the what? HH, right? The previous high, Abi? So look, we drag it like this. Using my what? Rectangular what? 2. Share? Share? So it means I will wait for the market to come back to this zone before I take it what? Up. Right? So this one now, let's say zone 1. This is your what? Zone 1. Right? Good. At what? Higher time frame. Then once you have waited now and the market has come to this zone, the next thing you will do is you will now go to lower time frame so that you can enter the market. Now, we are now in lower time frame. Lower time frame. Watch me on lower time frame. I can use H1, can use 15 minutes, can use 5 minutes. Then it's scalpers that use 1 minute. It's too risky. So watch me. Once the market comes to this zone, I will now come to the what? Lower time frame. Now I am in the what? Lower time frame. So watch me. Watch me. So look now. This is the zone, right? This zone, right? Right? I want to draw it well for you guys. So this zone now, this zone, look me on. Let me do it like this. Oh God, God. Okay, let me do it like this. Like this. I'm sorry, wait. Okay, so this zone now, see because once you go to the lower time frame, it will be bigger, right? I'm teaching you how to apply these things. So look, this is for me. I like H1. So if you start coming down like this, look, like this, because it's a little downtrend, right? The reversal, or sorry, the right one is retracement, sorry, Because retracement and reversal are different. Reversal is when the trend is changing. Then retracement is just when it is retracing to gain more momentum to continue towards the movement. So it starts coming down like this. The moment it touches your zone, wait for it to break, like to change direction to bullish. Wait for the retracement to change direction to bullish. So look me up. I will now wait. This is the zone 1, right? Zone 1. Look up. So I will now wait like this. Look me up. This is how you will see it if you want to place your trade. So I'm giving you textbook templates, like I'm giving you template like this to use. You get? Then it will come like this now. Don't forget, look up. You now break this place, this previous high. You remember? Do you remember that I told you that if market wants to change direction, it will break. Abi? So just do withdraw it like this, so that if you want to place your trade, it will be easy. Look, since it has broken this is a lower high, right? Lower low, right? Lower high, right? Lower low, right? Lower high, lower low, lower high, lower low, right? Lower high. Since it has broken the lower high, it means the market wants to what? Change direction in collaboration with the higher time frame. Because the higher time frame direction is what? Uptrend. And you know that in an uptrend, we are focusing on what? On buying. Do you get? So now, it has broken this little small time frames lower high here. So it means it wants to what? Change what? Direction. I'm giving you the pure template like this now. So look. So what you need to do now? Since always leaves patience, right? You are waiting, you are observing. Okay? So now it has broken this thing. That's another confirmation that it wants to what? Change to what? Bullish. In favor or in synchrony with the what? Higher time frame. Because according to the law, we will follow the what? The trend. Do you get? So now look, you can either see, if you want to enter this market, you can either, you will wait for it to retrace to this point to buy, or Camille, today is the day, so look at me. Who sleep? Go stand. I like you guys. So it has broken, right? Sorry, it's not good this long. So don't forget this point is this daily this higher time frame, right? Higher time frames high, high of the market, right? Good. So look, it has broken it now. So you wait for the market now to come back to this zone. And once it comes back to this zone, there are 3 zones here. 1, 2, 3. That's why if you check my chart, you'll see 3 lines. 1, 2, 3. You get? So it's either the market will start buying from here, or it will start buying from here, or it will start buying from here. So once the market now comes to this place, let's call it POI 1, that is point of interest number 1. You will now wait for bullish candle. This is where candlesticks pattern comes in. Like me now, I only use engulfing bar and pin bar. So once it comes here and a pin bar candle form, I will shoot it up. What? It might form pin bar candle here, but still not go up and come back to the second one. POI2, point of interest number 2, point of interest number 3. That's why, since if you know these things now, you will now split your risk where? Do you understand? So once the market comes to here, if you want to use POI1, for me, I don't use POI1. It's too risky because it's not too risky, sure, but since there are 2 more points downward, you understand? So me now, I would prefer to use POI2 and 3. Do you get? But if it comes here and goes, it's my own how do I put now? Eh? My own pocket, right? I will cry, say, hey, I don't enter, abi. There's someone that shows POI1 as his point of entry. We favor, abi? It will favor that person, right? But it might move from here. It might move from here, or it might what? Move from here. Do you get? So now, everything is following one word pattern, right? First, you get the direction of the market, right? Abi, that's uptrend, right? And uptrend, we are what? Buying, right? Then the second thing is you mark out your support zone because you want to use support and what? Resistance what? Method. Then once you mark out your support zone, you now come to the lower time frame and make sure market change inside that zone. Once it changes inside that zone, you take it up, you will enter, you will now join the early people, and it will now what? Go what? Up. It will now go up like this. Because this is higher time frame. So many things will happen in H1, in 15 minutes, 5 minutes. Those that are happening is what will change it upward. So now here, now the thing there, this place. Look at me! Is here. It is. This is now. So you will either buy at POI1 or POI2 or what? POI what? 3. Point of interest number 1, point of interest number 2, point of interest number 3. So once it comes here, you now wait for any bullish candlestick pattern. Let's say engulfing now, for example now. Right? Or pin bar. This is pin bar. Then once it forms there, you now click buy. Pap! Market price. That's at market what? Price. Then you put your SL because the general SL for this pattern is somewhere here. But it's too big because of the higher time frame. So you can put your SL here. If it comes down and touches it, you enter again at POI2 again. You enter the market again at POI2. If you touch it again, enter again at what? POI3 till it eventually breaks the zone down. Do you get? Is it clear? Is it clear? Is it clear?
Yeah.
Okay. Are you guys confused? Is it complex? Is it complex? Is it complex? Okay. I'll show you guys in the chart. It's very, very simple. It's very, very what? Simple. So either you enter at POI1 or you enter at what? POI2 or you enter at what? POI what? 3. Sometimes market might come to POI1 and it will what? Go up and move upward. Or it comes to what? POI2 and goes up. So you choose the POI you want to use. Like me, I'm using POI2 and 3. But if there's big money, where money big, I feel put down for POI1 too. I feel spread down for POI1 too, POI2 and POI3. Because me, I spread the risk across each point. So that any point it touch, I go enter them. Do you get? But if the cash is small, I will not enter in POI1. So that the money you get, the cash is very small now. So I will not split that money inside the POI2 and POI3. So draw it like this. You understand? Don't worry, you understand it. So POI1, right? POI1. If it doesn't go up in POI1, it will come to POI2. Then form any bullish candlestick again here. You will not, after the candlestick form, you will not enter the market. Show that you are buyers there. You now what? Enter. If it doesn't go up in POI2, it will come to POI3 before it will now what? Go up. Then it now go up to meet this previous This I, right? The all-time I, right? All-time I. So you draw it like this. This is for using this template is for uptrend while using support and resistance method. So you draw it in your book like this. Is it clear? Sure, it's clear. Let me come again. The first thing you need to do is you go to the higher time frame, either weekly or daily or H4. Me, I like using daily, like I prefer daily. Then once you notice it's an uptrend, and we say that if you want to, in an uptrend, you buy, right? Good. Look now, it has formed the next impulsive leg. So if you want to enter this market, you have to wait for it to retrace down, right? Before you enter, right? So which method will you use? If you want to use support and resistance method, it means you have to mark out all the support now, right? So the recent support is what you mark now, right? This is the recent support zone. Support zone, right? So you now wait. Once the market comes to that support zone, it means it has come to the zone where you will buy. It has come to where you will You will buy. So that's the beginning of the next impulsive move, right? Good. But you cannot use enter like that because it's coming down and it's coming downtrend. So before you can enter, the trend has to change to uptrend, and that change happens in lower time frame, not up, in lower time frame. So this is how it changes. So it's coming down, coming down, coming down. It came to your zone, right? This is the zone now, right? It's support zone. Sure? Support zone, right? So inside this zone, do not wait for market to change direction inside this zone. So it will now follow the law of like uptrend, that like uptrend in the higher time frame, uptrend in the lower time frame. So uptrend up, uptrend down. So it now follow once. You get. So now do not wait for this retracement now to form, to change to uptrend. To change to what? Bullish. So what is the criterion for something to change, or for downtrend to change to uptrend? It will have to break the lower high. This lower high, lower low, right? 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 So this lower high now, this recent lower high now, the market will have to break it first. Once it breaks it first, it means this will what? It has changed to what? Bullish, right? So if you break now like this now, so some people might enter like that, like as a break now, they might just enter like that. But me, no, I see the weight. I like the cheapest point. You get? So once it breaks now, like this, it goes up. It now come down again to this, to test back this zone. You get? And this zone, I name it your POI 1 as your point of interest number 1. It can go up from here, or it can go up from this point, or it can go up from this point. Don't worry. If I do practical, you see it. So just draw it. Just draw it. Just draw it. Should continue, right? Good. Same also for downtrend though. Same also for downtrend. Let me just do downtrend instantly. Same also for what? Downtrend. Look me on. Like this, right? Sure? Lower what? Lower. Now look now. Market as what? has broken this one lower low, right? Right? In a downtrend, we are using what? Resistance. How do we draw our resistance zone? We are drawing it from the what? Lower what? Lows. Right? So now. I will not draw it in my chart. Don't worry, we'll do practical. I will not draw it like this now. Then I will now wait for market to retrace back to this zone. That's what? Resistance zone. Once it comes here, I will not enter. So I can join the people that will sell it downwards, right? To break this previous what? Low, or this recent low. But in this place, what will now happen now? What are the things that will happen here that will make you to enter? It's in the lower time frame you now know. Do you get? So it means once the market now comes to this zone, you now will now go to the lower time frame and wait for the market, that this retracement now, to change to what? Downtrend. So let me draw it now. Look at me, oh. Are you looking at me? Are you looking at me? Hope you're not sleeping, oh. So look, oh, lower time frame, right? H1, 15 minutes, and what? 5 minutes. Look me, oh. Look me, oh. So like this, like this. Like this. So this is what? Resistance what? Zone. Sure? That's this line here now. Sure? This line now. Because in the lower time frame, it will be what? Big, right? Resistance what? Zone. So look me. I will now wait for market. See, in the look me. In the lower time frame, if it's coming back, it will be forming like this. In the lower time frame, you will be seeing it like this, not in line. Do you understand? And you will be seeing like this. Higher low. So for you to enter this downtrend now, you have to wait for this retracement to change to what? To downtrend. How? You have to wait for it to break this what? To break like this. Look me. You have to wait for it to break this previous what? Low. Sure? Abi? This is a higher high, right? Higher low, right? Higher high, right? Higher what? Low, right? Higher high, higher low, right? Higher high, right? Higher low, higher high, higher low. Now it has entered. The what? The zone. Well, you cannot use enter like that. Or place say once. No, you have to wait for it to change what? Direction. So now, look, it has broken this lower, this higher low, right? So you now wait for it to either go back to this place. This is your POI 1, or this one here. Let me just use straight line. This is your POI 2, POI 2, then this one 2, POI 3. So either you wait for it to come here, form bearish candlestick pattern, like bearish engulfing bar or shooting star, which is the bearish form of hammer of pin bar, right? Or any of those bearish candlestick pattern before you now what? Enter the market. Do you get? So you can come here and sell, or it comes here and sell, or it comes here and what? Sell. Do you get? Because I'm not the maker of the market, so I have to expose my mind, or how will I put it now? Or teach my brain that It go come here, it go come here, it go come here, right? So I should what? Prepare for either ways. Do you get? Because if you follow am straight and you're not flexible, it will break you. It's okay. It must come PYT. It not go come sometimes. So you have to be prepared on all sides. Do you get? If it touches PPR1, I will enter. Touches PPR2, I will enter. If it touches PPR3, I will what? So you have to split your risk well. Do you understand? Like me, I'm telling you what I'm doing. I will enter at PY2 and 3. If it comes to PY1 and goes, now my own bad luck. I will be say, you don't go leave me. I will go to another market that will obey my own law or my own what rule. I'm teaching you so plain, like I'm teaching you easy like this. You understand? That's how it works. So do it. So that if you want to trade now, you will carry the book, this now, you carry it now, and you be following it. That's what easy it is. Because this is the people for head fast. You know, people for see when you want to trade now, it's actually you are dull. It will leave. If you see my book and they draw, you will draw. You must draw. You must what? You must draw. So that it will form a muscle memory in your brain. It will become an integral what? Part of what? Of you. You get? That's it. So this is how to use support and what? Resistance method. First, your higher time frame, you get to support, you get to what? Resistance zone. If it's uptrend, you get to what? Support what zone. If it's downtrend, you get to what? Your resistance what? Zone. Then you will now move to what? A lower time frame for that retracement to change to what? To that same direction that you want to what? Enter. Abi? You whip them. So once it comes to PY1, wait for a bearish candlestick what? Pattern. Once it comes to PY2, wait for a what? Bearish candlestick what? Pattern before you now enter your trade like this, bah, at market price. Once it touch there, you now go to your buy and sell. By then you are what? You are ready. You've calculated your lot and everything. You've put your lot there, everything. You are waiting. You are waiting. You are waiting. You are waiting. Once it comes to that place and it forms that bearish pattern, bah. So this is how we do it. You see, these are what you have to follow the rules. Now, like this, now it's a rule. This is what we call trading plan, trading what rule that you follow. Do you get? How many minutes? How many minutes? Yes, now.